Hi, we're going to walk through problem 5-3A. It's very similar to the 5-1A, just to give you more practice. So we're going to be calculating our inventory costs using FIFO and LIFO. So we're given the dates, and we have the activities. We have the number of units, the cost that they were purchased at, and then we have the sales information. We're going to set up our table just as we did with the other problem, and use this to calculate our inventory balances. So first we have beginning inventory 600 units at $45. You multiply those two and we have inventory at $27,000. On February 10th we're going to make a purchase 400 units at $42. So we're going to add that into our purchase column. Then we're going to calculate our ending balance. So we still have 60 at 45, but now we also have 400 at $42. So we have two costing layers, two different costs, at a total of $43,800. On March 13th, we're going to make another purchase, 200 units at $27, and then we're going to add that to our inventory balance. So you can see every time we make a purchase, we're just adding a layer. And it's very good practice when you're doing this on paper to rewrite the inventory that you have. I know that's maybe wasting a little bit of effort, but you're less likely to make an error. I've seen students forget about inventory that they have or actually sell it on paper twice. So it's easier just to rewrite the 600 and then the 400 and then of course adding the 200. On March 15th, we're going to make a sale, 800 units. So the $75 is what we're selling it to the customer for. We're not going to see $75 on this table because this is where we're dealing with our costs. That's our sales amount. But we are going to use the 800 units to determine what cost we're going to sell them at. So using FIFO, first in, first out, we're going to be selling from the top layers, the original first layers. So we're going to sell 600 at 45, then we need 200 more. So we're going to go down to the next layer. So 200 of them are going to be at $42. Here's my amounts. So 600 at 45. So we sold all of this layer. We needed 200 more, so we went down to the next costing layer. So 200 units are at $42. So that's our total cost of goods sold. Multiply these two and add them together. Gives us $35,400. Then we want to calculate what ending inventory we have after we have made this sale. So again, the 600 at 45 is gone. We had 400 at 42. We sold 200. So we have 200 left at $42. And then we still have this last costing layer, 200 at $27. So ending inventory is $13,800. On the 21st and the September 5th, we're going to make purchases. So we're going to add those two. Our purchase columns, and then we're going to add another costing layer. We're going to do the same thing on the 5th. So now we have 4 costing layers. So we started off with these two, then we added 100 units at $50, and then we added 500 units at $46. So we have a total of 1,000 units, but at 4 different costs, for a total of $41,800. And then finally, on September 10th, we're going to sell 600 units. So using FIFO, we're going to sell from the top layer. So we're going to sell these, and then we're going to sell these. That's 400, and then another 100's 500, and then we're going to sell 100 of the layer at $46. So our cost of goods sold for that transaction, again, we've sold these, we've sold these, we've sold these, and then 100 here. Then we want to determine what we have left in inventory. So since these top 3 layers are sold, we don't have any of that left. So if we had 500 at 46, we sold 100. So ending inventory is 400 units at $46 for a value of $18,400. Now we're going to use the same transactions to calculate using LIFO. So we have our beginning inventory, and then we're going to make 2 purchases. So you'll see between the 2 methods, where we're going to see the differences are in the sales, the cost that we're actually selling, which units we're selling first. So we can go ahead and just add in our purchases. So again, this is identical to FIFO above. We started off with 600 at 45. We added 400 at 42. And then we added 200 at 27. On March 15th, we're going to make a sale, 800 units. So using LIFO, we're going to sell from the bottom layers first, the last ones in. So we're going to sell 200 at 27. Then we're going to sell the 400 at 42. So that's 600 units, and we need 200 more. So we're going to go up 1 more layer, and we're going to sell 200 at $45. So this is what our cost of goods sold is going to be, 200 at 27. So again, we've sold this layer, we've sold this layer, and then 200 at $45. Remaining in inventory is only some of this top layer. We had 600, we sold 200. So we have 400 units left at $45. Then we make a purchase. We have a purchase of 100 units on August 21st and a purchase of 500 units on September 5th. So we're going to add those to our inventory balances. So at the end of September 5th, we have 3 costing layers. We have the original 400 plus the purchase of 100 at 50 plus the purchase of 500 at 46. Then on September 10th, we're going to make a sale of 600 units. So again, using LIFO, we're going to sell from the bottom layer, the last one in. So we're going to sell this 500. And then we need 100 more. We're going to sell 100 at $50. So here's our 2 costing layers that we sold. And what we have left is this entire costing layer, 400 at $45 each, for a total value of $18,000.